My name is Mike Sullivan. I'm a former IRS agent and teaching instructor with Internal Revenue Service. I have done this work for actually, God, 5 decades. That's a good way to say 50 years. I'm a national expert in IRS resolution matters. I was a former teaching agent and revenue officer. I've worked over, like I said, 10,000 cases. I've been on Fox and ABC and all the major news stations. So I try to reveal to you what you need to know. My videos are usually 5 minutes, and I let you know everything that you need to know within that 5 minutes. I'm available for free consultations or representations, but I'm here mainly today to just tell you what you need to know about a subject that you've just hit and you want to know about, and that's who's responsible if you don't pay payroll taxes. Did you know that as a responsible person or officer, you could be held responsible for not paying payroll taxes? So that's what I want to talk to you today about. What I like to do is kind of pull the IRS curtain back and let you know what IRS is thinking on cases. So anyway, what happens is I would get a formal investigation to investigate a company that did not pay payroll taxes. I've done this thousands of times. Well, people do not know if you don't pay payroll taxes that officers or employees or people of interest have to pay those back payroll taxes. IRS isn't going to let them go, and that's because they're not a tax. They're monies that were withheld in trust, and somebody was supposed to turn that over to Internal Revenue Service and didn't. So IRS has what's called a 6672 penalty, or the trust fund penalty, that imposes this trust fund tax against the responsible persons, and it can be a whole bunch of people. So as a revenue officer, it was my job to examine the 941 payroll tax problem and to see if the company could pay it, and if not, even if they could, I would impose this penalty against responsible persons. So you need to be familiar with an IRS Form 4180. You should write that form down or stop my video and click on that form, IRS Form 4180. It's a 5-page interview form that the revenue officer will take to make the determination as to who's responsible. On page 2, it's a critical page because it asks who signed the 941s, who made decisions, who authorized, who could hire or fire, who paid payroll taxes, who was the important person that decided what happened within that business. Those are the type of people that IRS will look at. Sometimes it's one person, sometimes it's 10 people. IRS will pull the corporate resolutions, they'll look at loan documents, they'll look at the 1120s, they'll look at the 941s. There's a whole myriad of things that you do when you're investigating this, because this is a very serious thing that you're imposing this. One time I set this penalty up against 13 people, and most times it's one or two. Most of the people who are set up are people who sign the checks or sign the payroll taxes and never turn that money over. So it would be my job as a revenue officer to investigate who really is responsible. Now, some revenue officers take a shotgun approach. If your name appears on anything, they set everybody up. They'll set 5 or 6 people up for the penalty and say, work it out in appeals. The problem with this penalty, it's a joint and several responsibility. So if the total debt that the corporation owes, let's say, was $100,000, the trust fund recovery penalty, that is the withholding and 1/2 of the Social Security, which represents about 25 to 1/3 of the total payroll debt, would be assigned against responsible persons for the whole amount. It's not divisible. There's 3 people involved. They're not going to divide it in 3. They're asserting the whole penalty. So let's say you have a payroll tax debt of $100,000, which includes the withholding, the Social Security, the match Social Security, penalties and interest. If that came out to $100,000, when IRS imposes the 6672 penalty or the trust fund tax, IRS can only collect the withholding and 1/2 of the Social Security. Everything else goes away. IRS will then make that determination. They will send you out a letter that the revenue officer said this person, and this person are responsible, and you will have your day that you can present your case to IRS. And if you're not successful with the revenue officer, you can take that case to the appeals division, and you always should. So if the IRS has sent you a form 2751 and 1153, they're asserting the trust fund penalty against you. You really have to take that serious, because IRS is going to go ahead and impose that penalty against you, and that's what you take to appeals. We're really good on trust fund defense. So if you are that person who's going to be responsible, you better get a hold of someone, because once IRS has their teeth in you, they're going to set you up and as many people as they can. So you do have options, and that's when you want to go ahead and fight it. Thank you very much. Oh, by the way, I need a subscription. Don't leave without giving me a subscription, please. YouTube values subscriptions. That's why people always ask for them. Please give me that. I ask you. I try to let you know what's going on with IRS Free. So, buddy, if you have questions, you can send them to me. I'll leave them in my comments. I get back with everyone at the end of the week. If you need representation, I am your man. Thank you.